May profits be upon you. Welcome to another weekly Forex Forecast. We're going to be looking at the US dollar index right now. We're going to analyze the US dollar index and see how the US dollar is doing relative to its counterparts. Right now, if we look at the week ahead, what we can see is, let me get this a little bigger. Oh, too big. All right. Can I get it? Ah, that's better. All right. Now, what we can see is, and we'll go over to the left, all right, is that we have on Wednesday the Bank of Canada, all right, is going to, we have an interest rate decision to be made on Wednesday. Also on Wednesday, FOMC on Wednesday, all right, and in the late Wednesday, early morning Thursday, depending on where you live in your time zone, we'll also have the Bank of Japan and their interest rate decision to be made. Now, also Friday, we have a U.S. dollar tentative date for U.S. dollar core PCE price index. We want to see what's happening. There's a lot of volatility being introduced into the markets this week, and you want to be aware of it, all right? Because it's going to have a lot to do. The interest rate decisions, and they can have the impact of reversing the market or not. So what are we expecting for the U.S. dollar? Let's take a look. All right, this is the monthly view. We can see that in the macro view, we are making higher highs and higher lows. And I'm looking at this upward trend here, this upward trend line. I don't use trend lines to trade, folks. I just use it to mark structure. All right, that we are in an uptrend, and this could be the next potential higher low from here, and also from here. Each time I'm looking for this to act this diagonal line of support to act as support and support higher prices. All right, this is reasonable because it's happening. All right. Now, also, what is reasonable is look how long we were at this level. All right, months. All right, look how long we were at this level. Months. All right, look how long we're at this level. I said this when we first touched this line. I said there's a good possibility we're going to be dancing here for a little while before price moves higher or makes a decision to break the support line. All right, if we go to the weekly, we start to get a closer look at the current price action. This is weeks. Look at that. Look at that. Weeks. That is weeks of current current price action. All right, weeks. Okay, so we had to touch in. Now this move here, something's going on with my mouse. All right, I don't know what's going on with it. Hold on. Let me see if I can get it right. All right, so we have this move here that swept all of this sell side liquidity. I'm sorry, all the sell side liquidity, and we moved up above this this consolidation, and we started to get higher closes. We pushed back and then pulled back up. It's pretty interesting price action, but we're moving incrementally higher. You know how I feel about wicks. We look at the 50% of the wick, and if price trades below, or continues to trade below it, we can look for shorts or resist the urge to look for longs. Right? We come and tap it here during the month of October, right? And October brings us back again the next week, and this was last week's, how it closed last week. You can see this is an inside bar. An inside bar. What does that mean? It means that price isn't doing a whole lot, and it's probably because we have the FOMC this week. All right, and we're probably going to see this kind of price action for the next 2 days. All right, let's go down to the daily. But right now, what we're looking for is a strong close above these highs. We want to see highs and lows. We want to see price close above the high and low or low of last week. All right, and my bet is we're probably going to be heading towards the highs. All right, now just understand that FOMC, they are expected to give a 25 basis point, 0.25 basis point of a raise in the rate, which would normally bring the U.S. dollar value down a bit, but that might be already priced in. That's why I don't go by. I'm a conscious, right? I'm aware. I like to be aware of the fundamentals, but I don't trade based on them because that could change on a dime, on a Trump tweet, on the rumor of a war, tension in the Middle East somewhere or something, and then the market starts to turn around, and you know you have to be careful. Now, on the weekly, on the daily, here you can see in this market price. Oh, I should be using this. Yeah. All right. Price. What do you call? Respected this bullish fair value gap and pushed higher from it. And what did it do on this one? It respected that bullish price fair value gap and came back to it, and you see higher prices from it. And I've given you all of that in my forecast, right? Look at this, how last week went. Monday's candle was here, and we managed to go up higher Tuesday, Wednesday, Thursday, Friday, sideways. That's probably because of FOMC coming up. All right. Now, what do I expect? Because we've been respecting these fair value gaps and price moving higher from them, why wouldn't I expect this fair value gap to hold? This was Friday's candle. It closes a doji, indecisive, moving sideways, but you can see it came down to this fair value gap, moved towards the middle. I am looking for this to hold. As long as price holds here and does not close below that fair value gap, then I'm expecting higher prices. Okay? I hope that's understandable. All right. Now, the moment the market starts to give bearish closes below, come on, man, I didn't mean to do that. Below, oh boy, you're not going to drive me crazy today. All right. All right. The moment the market starts to give a close below that low, and we start to see a candle body close below that, then I'm not going to be holding on to my long bias. All right, I'm going to hold off on long bias. As soon as it breaks that's when I'll start to look at it as a bearish bias. But right now, the focus should be on, look at this. Look at it closely. You see that how the market created this bearishness there. Come on, man. We I didn't mean to do that. All right, that's why. All right, as soon as it created that bearish candle there and we closed above it, this created an order block. If price comes back down here to test this order block here, all right, that's fine. It's already very close to testing it here. That's why I'm looking for the failure of that fair value gap. If price comes down and tests this, and we start to get a candle body closure into this order block, I'm not going to be looking for buys until price starts to close higher and higher outside of this bullish order block. I should mark this bullish order block for my viewing audience right here. All right, that's the change in the state of delivery. And I'm looking for price to go up higher from there. That's all there is to it. Okay. So I am bullish on this market. Be patient with this. Understand you should be watching this market for the next 48 hours. All right. Until Wednesday when FOMC comes up. And we'll see what direction the market takes. But I am bullish in this market. If we take a look at the 4 hour, just a peek, we can see I'm right here, right? I'm right here. And you can see clearly there was a bearish, sorry, I don't know what that's about. All right, there was a bearish close, bearish candles, and we closed above them. And this should act as support when price comes back to test it. All right, and I'm looking for price to do just that. Okay, that's enough. I will see you in the next video. Hey, I'm going to be putting out a bunch of videos today. All right, the next one should be the Euro USD, and right after that, the Pound USD. All right, the next one after that is going to probably be gold and silver, and because Aussie dollar and New Zealand dollar, yeah, I may go into those, and US dollar CAD, that should be a good one, and then of course I'm going to do the uh, the indices, the S&P and the Nasdaq. All right, so look out for those videos. I'll see you in the next one. Thank you for watching. May profits be upon you.